My name is Calvina. I'm from UIB University. Hope you enjoy my video.
Hello and welcome to the discussion that provides an overview of the direct and indirect method used to prepare the operating section of the cash flow statement. It is important that you view this before class so we can learn more together in class. After viewing this video, you will be able to state the difference between the indirect and the direct cash flow statement and also states the line items that are reported on the direct statement and the indirect statement. U.S. generally accepted accounting principles give a company the choice of presenting the indirect or the direct methods of the cash flow statement. Almost all U.S. companies currently use the indirect method. Of the contrary, international companies generally provides the direct cash flow statement. The direct method states the amount of cash that is collected and the amount of cash that is paid for specific items during the period. There is no reconciliation to the net income and all amounts represent cash that was paid or received. You are looking at the format of the direct method's cash flow statement. Notice it states the items of cash collection and the item cash is paid for related to revenues and expenses reported on the income statement. The amount represents cash paid and received only. The amount paid and received for cash must be computed using formula starts with the item reported on the income statement and adjust for amounts that were included in the net income that were not cash, and let's the first formula revenues that are included in income and not collected are receivables. The change in the receivable represents the difference in the current period revenues and the amount that was collected in the current period. Assume the beginning receivable were collected and the ending receivable were not collected. Revenues are always matched with a receivable to determine how much cash was collected. Cost of goods sold is matched with inventory and accounts payable. Change in inventory affect cost of the goods sold and account payable states whether or not the inventory was paid in the current period. Assume beginning inventory was paid for in the prior period and ending inventory was paid for in the current period. Then assume begins account payable was paid for in the current period and the ending accounts payable was not paid in the current period. The total is the cash paid is suppliers mostly for inventory in the current period. All other current liabilities and prepaid expense are matched to the associated expense to determine how much cash was paid in the current period. The formulas are always income statement account plus beginning minus ending unless an expense is matched with an asset. The indirect method starts with net income and consider items that represent amounts included in the net income. Some revenues are not collected in cash this period or in the future period. Some expenses are never paid in cash. In the current period or future period, gains and loss are the net of the asset and the cash and do not equals the cash received from the sales. Current assets and current liabilities account are necessary because cash did not occur in the same period as the revenue or expense account receivable is used when cash was not received in the same period as the sales prepared. Expenses represent cash paid in the periods before the expense was incurred payable. Account represents was that cash will be paid after the period of expense incurred. Current assets and current liabilities represent difference in the cash and the amount included in the net income. Net income is adjusted for the items that were included in that income that did not also have cash paid or received in the same period. Here is an example of the operating activities section of an indirect method cash flow statement. Note that it begins with net income is adjusted for non-cash item A and is adjusted for change in current asset and current liabilities. Depreciation expense is added because it's an expense that reduced net income that was not paid, therefore there is more cash than net income. The gain is subtracted from net income because an increased income, however, cash was not received. So, cash is less than the net income. The negative account receivable represents an increase in account receivable. The sales increased net income, however, the increase in account receivable represents cash was not received. The positive income tax payable indicates that cash is higher than income because part of income tax was not paid in the current period. The negative account payable represents more cash was paid than the expense that were included in that income. It is possible to pay more than the current period expense if you are also paying for prior period expense. The positive or negative numbers means that the amount of the cash is higher or lower than the revenue or expenses included in the income. The indirect methods begin with net income and adjusted for items included in that income that not change cash. Non-cash expense and losses are added to the net income because they were not paid, and therefore there is more cash. Non-cash revenues and gain are subtracted from net income because no cash was received, and therefore there is less cash. An increase in a current asset indicates cash was paid before the expense was incurred. There is a less cash, so subtracted a decrease in a current asset and can be viewed as the asset was sold, therefore it is an increase to cash. Liabilities works opposite of the assets. An increase in a current liability indicates cash was not paid and therefore the company has more cash. Decrease in a current liability indicates more cash was paid than the expense, therefore the company has less cash. Net income plus or minus all the items that represent differences in the amount included in net income and the cash paid. There are times when the depreciation expense and the gain or loss is not given. In this case, the amount must be determined by making journal entries and using T account to locate the differences. Depreciation expense in the selling as an asset are the two transactions that change in the accumulated depreciation account. If you know the beginning and the ending balance and one of the two more transactions, you can plug the amounts and determine the other amounts. You will generally be given the amount of accumulated depreciation, so I have to plug up for depreciation expense. Gains and loss are generally determined by recording the journal entry for the sales using the additional information provided. After viewing this video, you will be able to state the difference between indicate and the direct cash flow statement. You should also be able to state the lines that are reported on direct method cash flow statement and the indirect cash flow statement.
Thank you for viewing this video. I hope you like it. And
Please like and subscribe. Oke, aku sih pertunjukan
sama
aja.
Li kasih aku, Li kasih pause. Jangan, nanti aku start lagi. Pause Li, stop Li. My name is Calvina. Thank you for viewing.
Ulang.
Hello and welcome to a discussion that provides an overview of the direct and indirect method used to prepare the operating section of the cash flow statement. It is important that you view this before class so we can learn more together in class. After viewing this video, you will be able to state the difference between the indirect and direct cash flow statement, and also state the line items that are reported on the direct statement and indirect statement. US generally accepted accounting principle give a company the choice of representing the indirect or direct methods of the cash flow statement. Almost all US companies currently use the indirect methods. On the contrary, international companies generally provides the direct cash flow statement. The direct methods state the amount of cash that is collected and the amount of cash that is paid for specific items during the period. There is no reconciliation to the net income and all amounts represent cash that was paid or received. You are looking at the format of the direct method cash flow statement. Notice it states the item of